The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Before we move on to the DAX, we're going to talk about the miracle of Broad Street. Yesterday, when the Chicago Bears were playing the Philadelphia Eagles, my grandsons, Mitchell and Avery, ages 5 and 7, were watching it on Netflix in Philadelphia as Sarah and I were watching it here in Tucson, Arizona. And, of course, those of you that watched the game, you know that there was only 3 seconds to go. And it looked like the Chicago Bears had kicked a field goal to win the game. Unfortunately, Netflix is on a 30-second tape delay. So when I called to tell my 7-year-old grandson that Philadelphia had won the game, he didn't believe me. He was crying. He said, no. He said they kicked a field goal, but they called time before the original field goal, and the second field goal hit the goal post and missed, and so the Eagles came out with a win. So it's really crazy when you see a 30-second tape delay on something like that. That's the second time I've seen that over the past couple months. So not all the time what you see on the internet is true, so just be careful. All right, as we look at the first chart here, which is going to be the we'll post it up here, which is the German DAX. You'll see that it's made a really nice Gartley, and it's backing off a little bit. It's the exact same pattern, folks, that we're seeing in the FTSE. They're absolutely identical. You could possibly pick one or the other, and it wouldn't make any difference at all. So it's going to be pretty exciting to see these things unfold. Now, I know a lot of you are interested in the stock market, of course, because we had this monster move. I'll walk you through what I'm seeing, and this is my 2 cents worth. Here's where we were. If you recall, on Friday, we were talking about the fact that we had made a perfect ABCD at a 382 retracement down there at 2440. That was about it can't get any more perfect because the ABCD was perfect in time and price, and it came in exactly at the 382 retracement, and it was also very near the 61% retracement of December 27th. Now, there's a slight difference between the big up move that we had on December 26th and what we had yesterday. I don't know the meaning of it. David White might be able to help us a little bit on this, but on the December 26th date, there were 6.5 to 1 more advancing issues than declining issues. On the move on January the 3rd, there were 4 to 1. 4.5 to 1. So there's a slight difference in the strength of it, but we've gone up above that coveted 25-20 level that we've been talking about for quite some time. And if we go back and look at it just a little bit longer, just going back over the last 10 days, you'll be able to see that same pattern that we talked about, but we've extended it. You'll notice if that ABCD pattern is correct, we could easily get to 2640. Folks, if we can go from 2320 to 2520 in 2 days, we could easily make 100 points in a couple more days. So that's not a big deal. Now, we did get to that 61% retracement last night, or Sunday night. We got up to, I believe, 23. Let's try it again, 2551. The 61% retracement came in at 25.45. Since that time, we've moved down to 25.28, and we've been hovering there back and forth, down a little bit, up a little bit. But, we've had a really big run, and that's not unusual to see some profit taking. The key level to watch today, from my opinion, and this is my 2 cents worth, is to watch the level at 2520 to 2500. That's what it looks like from the. Oh, we got John from Philadelphia. John, go Eagles! Go Eagles! Go Eagles!
Yeah, well, I'm glad your grandsons are very excited. Good for them.
Oh yeah,
That's nice.
yeah.
That's nice for children to get that little thrill.
Oh, my gosh, they certainly are. Unfortunately, Cy Monley was at the game in Chicago rooting for the Bears, and with a few seconds to go, he Skyped me or text messaged me that that we finally won one, and boy, just a few seconds later, look what happened. So anyway, what can I do for you, my friend?
First, I'd like to ask you to finish that thought you were just speaking of, namely on the S&P futures. You were mentioning 2520 to 2500 in your mind is an important benchmark. Can you just finish that thought first?
Yes, basically, we had a ride up to 2551, and these markets have been running in sequences of 30 and 50 handles. That would be down 50 handles from the high down at 2500. That would be a 382 retracement of the low that we made back on Friday. And, that was a powerful move when you see the stocks up 700 points and virtually not even backing off at all. It was just constant buying. So that's really key. John, we got a potential here for a major bottom because of what happened back on December the 26th when that New York Stock Exchange index hit the exact 618 on the weekly. That there's a possibility that we could actually do a little better than some people are thinking, but we won't know this until we move out another week or two, and it could give it up at any time. That's for sure.
Yeah, thanks for that. And to segue right into that thought, I've got a question. And you've kind of hinted at it, but Friday during the day and then over the weekend, as participants and commentators and analysts had a chance to review price action and fundamental inputs, I'm hearing a number of people say, hey, right here, right now, January of 2019 is just like January of 2016, because there is going on behind the curtain something people call a Shanghai Accord, where the central bank in China works in concert with that of the U.S., Japan, and Europe, and essentially provides the fuel for a sustained bull run. So that's what I'm hearing. My question is, can you just share your thoughts, your impressions, your initial reactions to that storyline, please?
Well, John, the storyline's over my pay grade because I'm the last person they check on before something like that comes to. But that's a really good point. I've seen the article, but I really don't know what they're going to do. But by gosh, the market is responding to something that's out there big. I mean, the news has been horrible, and yet the market comes back like a rocket. So that's really some very, very important thing that's going on there. I believe they're going to. This is my two. To pick or take this Chinese thing out. This tariff thing is going to be done, and then we'll move on from there. That's apparent to me in the grains and some of the other soft commodities. But frankly, it's still a little bit early. But I really don't understand that other stuff.
Yeah, nor do I. Hence my question. That leads directly into my second question for you. Regarding the S&P and the futures.
John, stay with us. We got to pay a few bills, and stay with us right after the break. Will you stay with us, please?
I will. Thank you.
Okay.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're talking with Mr. Z from the Tiger Den. And Mr. Z, what else can we chat about here that you're interested in?
As it pertains to the S&P and its futures, I wanted to ask you if you could give us some further guidance and elaboration upon Norm Winsky's work from last week. You had him on the show Thursday the 3rd. I confess, Larry, I've always had difficulty using Mr. Winsky's astrocycle work on account primarily of so many astrocycles being discussed and my never being able to pinpoint what's important, what's not. Mm-hmm. But what I wanted to ask this, on the S&P, we bottomed the day after Christmas near 2350 on the cash index. And, of course, we've rallied sharply. And lest us recall, in the ensuing days, we've had 3 days where we've been up 2.5% or more. Of course, the most recent was Friday. But there were 2 other days back in that stretch where we had the same thing. Well, so we've had this. People are all jazzed up, at least talking about a Shanghai Accord replay. And Norm's work said this past weekend was not only a new moon and solar eclipse, but he listed just a bunch of things that are significant to him, astrocycle-wise. So we rallied into Friday's close. We extended the rally into Sunday at 8 p.m., and now we're lower than that. My question to you is this conceivably a top and end of a vicious short-covering rally?
It certainly could be, John, because, the Fibonacci number we looked at was at 25.45, and we made 25.51 early Sunday night, and now we've been lower most of the time. I think the key is if we get below 2,500 in the S&P, it most certainly would be. Regarding the cycles that Norm Winsky used, it's a very simple thing to do, John. Only use the ones that work. Don't use the ones that don't work. I'm sorry to be trite about this, but actually what I do, John, is very similar to what you do. I look at the patterns first, and then when the ratios line up with the pattern, that gives me an edge. The time is, very, very hard to figure out, but if I have pattern and time together with, a little bit of geometry and some simple mathematics, that's really the edge that I'm looking at. The news and other stuff, I gave up on that so long ago that I don't even, it doesn't even bother me anymore. So, man, I don't really care. So I just move on to the next one. I get, posts from people that give me some ideas about what's happening in the news, but frankly, it comes down, because I've seen so many times where, the market is always the most bullish at the top and always the most bearish at the bottom. And that's what I try to remember from listening to old Jesse Livermore, back in the 1920s and 30s. So that's really how I follow it. As far as the astrology part, I really believe there's something there, but, I've gotten bits and pieces of it. I have guests on here that are pretty good. We have Bill Meridian, Arch Crawford, Tim Bost, Norm Winsky, and it's really, we also have Stan Harley, who doesn't use astrology, and he's got some good. So, that's basically it. John, one other thing, there's a real testament to some of this stuff, because look at Steve Rhodes. He's the #1 timer of the year, and he's using the same types of things that you and I use, and plus some other things. But, there's a testament to technical analysis certainly has some really good things working for it.
Larry, thanks so much on all that. I wanted to ask if you have time either in this segment or the segment to follow to just field a question on the gold market.
Sure. I'll be happy to. I really that we've made some type of a pretty good top in gold up at that 1,300 level. If you looked at it on a longer term basis, I'll bring it up here on the weekly chart, and you'll be able to see it that we did make a 61% on the weekly. I'm looking for hopefully a pullback. Hopefully is a terrible word to use for trading, but a nice pullback down into the 1220 area would really be a nice bullish sign for gold. But we hit that 61% retracement on the long-term weekly, and we also did it in silver too. Silver actually missed it by about 3 cents. And that's another one. So until we can clear those levels on a closing basis, I think that we're probably ready to have a correction. And we were up 10 days in a row with higher highs in gold, so that makes it very, very overbought in its own right. So that's what I'm watching in gold and silver.
I appreciate that input, Larry. Let me just be clear to you and your listeners. You and I are approaching this market right now differently. And, of course, there's nothing wrong with that, and, only time will tell who's got profits and who doesn't. What my question to you is this. First, the observation, yes, it was 10 days up. In fact, Larry, from December 14th into the high Thursday night, I think was 13 or 14 trading days. So powerful, relentless, straight up for 14 days. And then that shakeout intraday on Friday. I'm taking a much more bullish view, and I'm kind of thinking, if a market is very bullish and extending quite a bit higher, it is going to get to resistance levels, maybe pause, maybe not. But if a market is going to be truly bullish, for example, in gold, getting over 1370, 1380 en route to much higher levels, you're going to pass resistance levels, a bunch of them. You and I can come up with a zillion different ones. My question to you is, what can you share with us in your work that says, hey, we need to focus not on the short-term patterns, but view this thing more intermediate term and stick with the longs? That's my question, if you can assist.
Well, the real key level from my point of view was 1193 when we made that 78% retracement, off of the 1160. And since that time, we've been up $100. That's only been about 4 weeks. So that's telling you that the market is very, very powerful. And not only that, John, but silver finally took the lead. The silver-gold ratio has finally turned where silver is actually moving more bullish than gold is. That could be a very significant factor, too. But we're really at some really strong resistance at 1,300. And as you mentioned, it can go through there like melted butter. In fact, we went from 12.78 on Friday. We rallied almost $20 an ounce just overnight in Sunday night trading and stuff. So it's very powerful. You're right. You could easily go flying through these numbers without any trouble. And with the news out there, with everything that's going on, that could easily happen.
Can I ask this follow-up question? If that's the case, and everything you just said is just describing some recent history, so it's fact of the matter, with that strength, why should we even care about short-term shakeouts? Why should we not just say, no, I'm long from lower levels and just hold?
That's what you should do, John, but unfortunately I'm not in that position, so I've got to look at it on a shorter-term basis. You're right, and I'm wrong on this one. I didn't see this coming, my friend. Thanks for calling in, John. We really appreciate it.
Thank you.
You bet.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and before I get into the socioeconomic things from Elliott Wave, I wanted to post the chart here of Netflix. If you remember, on Friday, it was Thursday, the market was down about 660 points in the market, and Netflix was up on the day. In fact, it was up about 3%. And I mentioned that day, I said, do not be short this stock, because any stock that is up when the market is getting hammered like that is really bullish. I mean, it takes a lot of conviction for someone to buy that stock with the market being down so much. They either have to know something, or they've got a tremendous inside information, or they got a really strong opinion on it. So whenever you see that, be careful. Also, if the market is up and a stock is down, that's telling you it's extreme weakness. So keep that in mind if you ever get in the idea of shorting something in a market that is that strong. You just don't want to mess with that. Now, I do want to talk a little bit about the information that was sent out by the Elliott Wave folks, and it's about the social mood going on with the presidency and impeachments and stuff. And what they're saying is that when you have a positive social mood, like was happening with President Andrew Johnson back in the 1860s, that kept him from being acquitted. And if we go back and walk through some of these others, we'll go back and look at the time period under President Clinton. We'll get this up here and show you here. Here again, he was in this area where the market was going straight up, and so he was able to he's acquitted by the Senate and stuff. But anyway, if we take a look here at what happened to President Nixon, and this is the one that shows that the market, was on its way down, and the social mood was very negative, and that helped him, force his resignation, and also the fact that he had done some really bad things wrong. But let me, very good, Fletch. Here's my 2 cents worth, folks. This is where I really got interested in astrology. I'm going to bring this up. This is from the book Astro Cycles: A Trader's Viewpoint. The chart that you're looking at here is from the S&P in late October 1974. And if you look at that first arrow on the left, it shows all the conjunctions that are there. There were actually 8 of them lining up during October from the 21st to the 31st, and that was a monster low that we had in the market. And also what happened, if you would go back a little bit farther and go into December of 1974, we'll see the same thing occurring in December of that year, because some of these planetary things were actually going into retrograde motion. So you had a double bottom in October and December 1974, and that's what set the stock market up. Dr. Ruth Miller introduced me to this, and I got very interested in it, and that was the start of Astro Cycles: The Trader's Viewpoint. And with the help of Jim Twentyman and Dr. Ruth, we were able to put some of these statistics together that show that there's something there. But boy, oh boy, let me tell you, boys and girls, it is not a holy grail, as we've seen so many times. You're going to be wrong a lot. Like the good fairy says, you've got to kiss a lot of frogs before you find a princess. So, pay close attention to that, because it's all about risk control and being able to quantify your risk and not being in too much of a hurry, to get in a position. The question is, where do you get out of it? That's the real key. How much risk do you have to take? I wanted to bring one other chart that I think is very important. This is from the Federal Reserve. I want to bring this up to show you that the relationship that we're having now, this is a very long-term chart going back over the last 30 years, and it shows the ratio of U.S. corporate debt to gross domestic product. And it just recently made a new high. And as you can see here, with that little 3-drive pattern that we're looking at, in 1990 we had a recession, in 2000 we had a recession, 2008 we had a recession, and look where we are right now with a 3-drive pattern. Now, no one's calling for a recession yet, but we want to keep in mind that we do have a lot of debt out there. And debt is the problem that we all have to assume eventually. And if we look at this, is from a Gallup poll showing you how much debt is actually out there in the world, and that is really a scary thing. If you look at global debt, it is just beyond wildest dreams of $247 trillion. That is a lot of money. It'll sometimes in the future, it'll all be reset, but in what way, we never know for sure. So we'll keep following it as we as we move through some of these things. I do want to bring to your attention also one of the charts from our friend a week or so ago. We had Tim Bost on from Sarasota, Florida, Financial Cycles Weekly, and as you can see, he was looking for some topping action here in early January, and then of course in the middle of February he's got another particular conjunction that looks really interesting that we'll have him on again, of course, to show where we are with some of these things. So these are just a few of the things that we're looking at. Well, that the money for, that folks about the wall and stuff, we all know that that's all political. I mean, anybody that's, and I really don't even like to look at the politician stuff anymore. It just, it really just doesn't make any sense to me. It's been going on for so much, it doesn't really make any difference. You really can't tell what the heck's going on with these people. So, I just look at the shorter term patterns and see what they look like. Now, the one thing that we do know for sure is the fact that low that we made in the New York Stock Exchange Index back on the 26th was a major 61% retracement on the long-term weekly chart. That is just tantamount. And if we looked at that, I don't want to bring up the banking index because I keep posting it. I post it in the newsletter and everything, but that banking index went exactly to 79 and change. It's rallied quite a bit, and it's acting very, very strong. So some major bottom has occurred in these past 2 weeks, and it's also occurred in the currencies, folks. We've had some pretty good moves in the currencies to the downside, and that's a really important thing, to wipe out some stops, especially in the Japanese yen and the British pound. They tried to do it, but the market came back really quickly. Same thing in the Australian dollar. And the Canadian dollar has been working absolutely beautiful. It's been the easiest to predict, and so far that has been a huge win for the 24/7 folks, so we'll see. Now, someone's already asked a question about why are Mr. Z and I different on the gold. I'm looking at a Fibonacci number on the weekly basis. He's looking for something larger. That's why some people like chocolate cake and some people like vanilla cake. It doesn't make any difference which one's right and which one's wrong. It's a question of how much he's willing to risk versus the question of I'm willing to look. Ruby's asking us to take a look at platinum. It's acting much better. It's really actually picked up quite a bit here. Let's get this up here for Ruby so we can take a quick look at it here and show her the chart of the platinum. The silver's acting okay also, but we'll get this chart up for the platinum so that everybody can get to see it, but it's acting pretty good. We're almost at a 61% retracement in the hold on one second here, folks, if I could just get this up here, and then we should be okay. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're going to talk a little bit about this Chinese tariff thing, but who knows what's going on. But you'll notice that the corn market, we've been following this rather closely, and we had a beautiful head and shoulders pattern finishing there around Thanksgiving. And then at Christmas time, we had a really nice pullback that gave us a chance to buy it around that 375 level. That was a 61% retracement. We went a little shade below it by about 3 cents, and now it's rallied to look pretty strong, and it looks like we're heading towards that $4 level, possibly in March corn. And if we solve these problems that we're having with the Chinese tariffs, I think you could see a pretty big move. Just the shorts themselves starting to cover would cause this thing to probably move a lot more. And we've seen a really nice move also in the soybean meal. We had a really nice head and shoulders pattern in that, and that had a very, very strong move higher, and it's moved well over $1,500 higher in the soybean meal. So both of those are acting nicely and telling us there's probably something in the wind back there that people are getting insight on. Now, the insight that they're probably getting is from their sources, and believe me, some people have a lot of sources, and sometimes they're absolutely spot on, other times they're not, but they'll be reflected in the marketplace. Because if the marketplace is going to tell you that these prices are going to go up, there's going to be more buyers, and if they think they're going to down, they're going to go be more sellers, and that's why you want to take a look at technical analysis. You can add it to the fundamentals, but try to keep an eye on those technicals, because they can tell you bad things, they can give you misinformation, but they can't hide from you. If prices go down, there's more selling. If prices go high, there's more buying. Now, let's take one look at another market that bottomed pretty much spot on, and that's this high-yield bond or junk bonds. Let's take a quick look at this on the long-term weekly on junk bonds. You'll notice that we stopped just a little below the 61% retracement down there at 80. We're now trading at about 82. We had a really pretty 14% sell-off in that, but it's held up relatively well. So right now things are still on the positive side. We're working through that big up move that we had on Friday. Frankly, I don't think we're going to be up strongly. We were up almost 200 points in the Dow early Sunday night, and yet, they did sell off. We were up can you believe we were up 270 points in the NASDAQ on Friday? Well, that is one heck of a huge move. So we need to pay very, very close attention to these things as we see them unfold. Okay, one other question someone just asked is about this gold-silver ratio that we've been talking about. I'll post this, and we'll be able to take a look at it. Maria is asking about a 4-hour chart on the bonds. Maria, for you, is anything. The sky is the limit. Let's get in here to sky. Hold on here. We'll see what the bonds are doing here on a 4-hour chart. I know I have it here. The question is, will I be able to pull it up without too much trouble? And I think I will be looking at it. Oh, we just made a, yeah, hold on here a second. This was a, give me a second here, and we'll take a look at it because here's where we are. All right, put this up here. And there we go. We got that 3-drive pattern that we were sort of looking at. And what we've done now so far is just make a 382 retracement off of that high on January 3rd. So this market is definitely overbought by a big stretch of the imagination. So keep in mind that it's going to be very interesting to see this one unfold, because long term this is a bearish market, folks. You can listen to what they tell you, but you just look at those long-term charts. Let's just put up the bond chart long term so you can see what I'm talking about. We've been, it topped a year and a half ago, so it don't make any difference. This is a bearish market, and we're having a really strong rally in a bearish market, and we'll be able to look at it. Yes, Ruby, we wanted to cover the sugar because we felt that sugar had a really good chance to get around that 1155 level. We only got down to 1175, I believe. But let me get the sugar up because it's trading really strongly today, and it got back above that. Boy, we just missed it. This was one that you like to write home about, but we just missed it by about 8 pips here of hitting the exact number at 1160. We got down to 1168, and now we're trading above 1215. So we know that support there's around that 1160 is really strong. That's your risk factor. You get below that, there's something not right. So that's what we're watching here in the sugar. The same thing in the cotton. I don't trade cotton. I haven't for many years, but cotton is doing the same type of a move where it's down here for like a week and a half or 2 weeks. Let's just take a quick look at it from a technical standpoint. You'll see that we've completed a whole bunch of things here in the cotton market. We're at a 1.618 expansion here. We've got an ABCD pattern, and we had a pretty good move off the bottom. So anything below 71 in March cotton would tell us it's most probably a failed pattern, but right now it's done pretty much what you would expect it to do. Now that's neither here nor there, so we'll keep watching it, but it does look pretty good. Coffee is in the same situation down there at around 95. It's held that level, and if we can stay above that, coffee, in fact, all of these things on the softs are doing the same thing. Now the grains and oilseeds look much better. And that's because, no matter what China says, they have to eat. They got 1.4 billion people to feed, and they don't have enough food to do that. So they have to do a lot of importing, and these tariffs have certainly hurt some of our farmers, but they're starting to come back from it. And in addition to that, they've had this problem with the hogs, with their swine flu, and that is not doing well. But, the market in the February and the June hogs has not really taken off. I mean, it's been a nice consolidation zone. So they're either getting that problem fixed or it's getting ready to raise its head again. But if you take a look at that, well, that's okay, Maria. Sometimes there'll be another train right behind it, so don't worry about that. We'll see what's moving on to this now. We'll take a quick look at some of these other things that we want to see what the market's doing right now. We wanted to see that S&P get down to that 25. 20 level, but we haven't quite done that yet. We've only been down as 25, 28, but we'll be watching it relatively closely here. The 38% retracement on the notes comes in at 12.18, and we're 122.18. We're 122.12 right now, so that's another one to look at. The 382, when you've had a big move like this and the market breaks and it doesn't rally back any farther than the 382, it's telling you that there's a problem somewhere, and that's the key to pay close attention to it. That's something that I think is important. We're having a little bit of a rally here in the euro. We got up to this area, but this 14.55 to 14.60. We should be topping in the euro in about the next 15 or 20 minutes, and if that's the case, we shouldn't get any higher than 115.05. And then we should start a little bit of a consolidation to the downside. Regarding the gold, 1294 was a number we were looking at, and we're trading at 12.93.10 right now, so there's not too much happening in there. The Canadian dollar continues to move in the direction that we thought it was going to do. It's had a huge move, which is usually a good sign starting at the first of the year. So at that point, we'll watch this one also very, very closely. But boy, we've got some key numbers, folks, that we can really hang our hats on with what happened in Forex last week, what happened on the 26th of December. You just put those little circles around your chart, and that's what you want to act on. 877-926-7766.
The secret to being successful in trading and investing is to have an untiring, undying, and unquenchable thirst for knowledge. There are certain situations where you can absolutely understand what the next move of the buyers and sellers is likely to be, or what I like to call a competitive advantage. Hi, I'm Steve Rhodes, the #1 market timer for the S&P 500 in bonds, and on Tuesday, January 8th, I'm going to teach subscribers of Mastering Probability how to use Tom DeMark's setup 9-count and trend lines, a tool that called for a change in trend at 3:30 in the morning on the day that generated the Dow's largest daily point gain in history. If you're looking for a competitive edge, then now is the time to take advantage of my risk-free 30-day money-back guarantee trial for my daily newsletter service, Mastering Probability, which will provide you with immediate access to this live workshop, which will be archived on your members page for the next 30 days. You have nothing to lose and everything to gain. Sign up today at TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the volatility index chart showing you the big ABCD pattern. We're in an area we're going to see volatility increase a lot this year, so that's one of the things that you should probably look at. It gives you a pretty good idea of some of these things that are moving very, very quickly. We're having moves in the S&P of 40, 50, even 100 handles, and that's not for the faint of heart. So you've got to be able to put your positions on and be able to at least be able to protect yourself in some way. That's what we're trying to do, with technical analysis, is to narrow these patterns down a little bit and, get that place where you don't have to risk very much at all by looking some of these key support and resistance levels. So that's something that we want to watch very, very closely. Tomorrow, folks, I don't know if you know this or not, but it is a holiday. All markets across the world are all closed. The U.S. is closed. Europe's closed. Asia's closed. South America, North America, Antarctica, and even the all across Russia is closed. And if anybody can tell me why, they get a big prize from TFNN. And the answer is, judge's ruling, it's the birth date of Elvis Aaron Presley, January the 8th, 1932 in Tupelo, Mississippi. So all the markets will be closed based on my decision, but I'll probably be overruled, and we'll see you back here on the flip-flop tomorrow, and we'll be able to see. I don't know if you know this or not, but Elvis had a twin brother who died at birth. And so we'll see how this works out. It's all day long. You bet, Tommy. Play the music, baby. That's what we have to do. We don't do the Beach Boys anymore, but at least we ought to be able to do that on that. Oh, the holiday is Monday, January 21st. Yes, and that's a big astrological deal, folks. That happens to be a lunar eclipse and a supermoon, and I believe we have Norm Winsky for that. We also have Bill Meridian will be our guest on Friday. Stan Hartley on Wednesday. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.